Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, April 19th, 2024. It is 9:47 Eastern Time as I'm starting the video, so we've only been open for trading now for 17 minutes in the regular session. Wanted to get one out early. I wasn't able to do any videos yesterday. I mentioned I had contractors here, and just the entire day kept getting pulled out with them, so got to my desk when I could and give you, a couple of quick updates. But what I'll do in this one, we won't go all over the place, as far as different sectors and different asset classes and all that. Let's just talk the stock market in this one, namely, the two indexes that I've been, harping on being short and sharing my two favorite sectors. I'm sorry, indexes are short. That's the small and the mid. Tech. Gosh, early guys, I haven't had enough coffee yet. Technology, or the tech-heavy QQQ, Nasdaq 100, and then the Russell 2000. I'll start really, if I can get to the Russell, I'll get to the Russell. But let's start with QQQ. That is, to me, it's everything. It is, again, it's just a magnifying glass, if you will, into the market, the whole stock market, because it just has the much higher concentration of the stocks that matter the most. That's the formerly known as Magnificent Seven stocks. So we're going to go over that one, give you my thoughts, and just want to say and reiterate, this is where I make money as a trader. Obviously, I'm very adept. I go long and short, but I'm just as comfortable shorting. Stocks tend to fall faster than they rise, number one. And traders generally, swing traders, make money when the VIX goes up, when volatility's high. When does the VIX go up? The VIX typically goes up and the market goes down. Not to say we can't make money when the VIX is low. There's always, just got to kind of change gears on what you're doing and how you're trading. But when the VIX is elevated, as it is now, and volatility's high, you get these big swings. And if you're, nimble and an active trader, and I try to speak to all that, you can, game the zigs and the zags. I've made it very clear long before it even happened. Not only that I thought we'd come down to the bottom range, ultimately break it. We'd start to accelerate. The volatility would start to spike up. The moves would be more to the downside. We saw that last night was a big drop in the futures with the Israel attack on Iran, but then they recovered that. But what I want to do is just kind of convey that you have to have a trading plan. If you don't know, are you a swing trader, a trend trader, an active trader? If you don't know that, then let me tell you, it's a good time to step back, paper trade, cut your teeth, trading first. If you start to try to trade corrections and bear markets, the market will chew you up and spit you out. This isn't a follow me site. I give you what I'm doing, and I do everything I can to tell you in advance the key levels to watch, where to, cover shorts, enter shorts if you're, shorting, or likewise going long, bounce backs into resistance, which ones are likely to fail. And then also, even a step further, is how, I think things will unfold. It's one thing to just give someone a price target like the analysts on TV does, they do. But it's a whole other thing to kind of say how it's likely to look, how we're likely to get there. And with that, there was a comment yesterday. Someone, one of the subscribers said, they had a very profitable trade on some butterflies. And that's, this is where I personally, I like futures and share. I've traded options in the past many, many times, made a fortune, lost a fortune. It's just not my thing. And it's, if you can do it, great, especially when you're doing them, with not just naked options, raw puts or call. That's just leveraging up to the hilt. And you're either going to be very happy or very unhappy. So if you can, take, these levels and where we're likely to have the reactions, and you can sell these spreads and all kinds of things and maybe profit that way. But again, don't, talk to others on the board that trade options, and they can share their strategies. I just focus on the levels that we're likely to go to, the levels that will matter. Open the door if they're broken support levels, open the door to the next downside. Likewise, if the trend is bearish, where you might want to short rallies into resistance. So, all right, let me start out by just picking up on the post I got out to you this morning. That was the In recent videos, I covered this bear flag on the 60-minute chart. I initially gave you a target that was slightly above this, and slightly below it, because the bear flag hadn't broken yet. I was very clear on that. That's that 421.62 level I had. And then the bear flag pushed up and made one little peak higher, and I put this line here. That would have been a couple days ago on the 16th. Actually, updated on the 17th. I dragged the line down, so 2 days ago. And I told you that never fails to amaze me how well that comes into resistance support levels. So it is support. It is also a measured target. But this is, guys, remember, I try to pull back to what I've been talking about for weeks and months now, that if and when this came, which it did come, and look how, you think it's mere coincidence. That's where the bear flag formed. That was the breakdown. And the flag was the bulls trying to regain that level, and they couldn't do it. So that was that area of consolidation. Now, where I'm going to here is, this is a 60-minute chart. This was our guide kind of for the last few months, but it was, as I made very clear, you could just, if you're just looking at this, it would be a complete guessing game as to which way it's going to break. It was the divergences here on the 60-minute time frame, and every other time frame out, all the way to the weekly, daily charts, even the monthly charts. And it wasn't just divergence. That's not the be-all, end-all. It was overbought conditions. And then I've been talking more about macro, fundamental analysis, the economy, and what interest rates are doing, inflation, than I have in a long, long time, because it matters very much now. So there's been this huge perception of where market participants believe the market was going, and versus in inflation, of course, where that all was going, which was down and lower. And so stocks would go up, and we saw the opposite, and they ignored it, and they have been ignoring it. And I still think it's not, fully priced in. So where am I going with that? So that's kind of longer term, and that makes me say, look, okay, we hit the measured target. We're very oversold. I pointed out this PPO the PPO level. If you go back to any of the videos for months now, even to last year, you'll see I had a white line there at 0.77. You might say, well, what's that mean on the PPO? Typically, PPO in a MACD, it's only going to give you a zero line there, because it's it's theoretically range bound by 1 on the upside and 0 on the, but it never gets to either 1 or 0. And so what I do is I look at extremes. I just roll back my 60-minute chart. Here, let me do this for you. And you can see what I'm going to do is just show you every time it's gotten there. We're very close enough right now. We're this close back there. So that's where we are now. And this is where we were then. I'm going to pull this down a little bit. Let me do this. Pull it down just a little bit. And I'm just going to circle the areas when we hit it. And so that was the best buying opportunity we had all year right there, that dip to step in and buy. It gave you that. Right before then, you got this. That was the best buying opportunity of 2023, the previous year. You got all that. We had one little one right before it. Gave you a bounce, and again, even if you follow the signal religiously. So what I said this morning, and again, I'm trying to be very careful with my words. When the primary trend is bullish, and we know it was in 2023 and in the first quarter of 2024, this is a golden ticket right here. You get that oversold. Most people look at the RSI for oversold. In fact, I don't know of anybody, maybe others do, that use PPI as an oversold indicator. I usually glean divergences, bullish and bearish crossovers, things like that, zero line crossovers. But that shows there that these were some of the best opportunities to go long. And again, let me reiterate, we were in a primary uptrend. We still are, if you look at it from a longer term perspective, off the October 2022 lows. So here's what I'm getting at right now. We had a crescendo of just, I want to call them angry bulls, subscribers on the site that were just downright seemed angry at my analysis, that I could possibly not be on board with everybody, all the bulls, all these experts on TV that said we're going to higher, there's no correction, there's no soft land. And again, look, we haven't even hit, by the way, I'm going to consider myself, that initial swing trade, yeah, we hit the bottom of the zone. That was the minimum target for that swing trade post-Fed. We shorted the highs. But I also said this is a trade as well that you can hold in position for, ride it out for a breakdown, set your stops above there and hold out and go to those daily swing targets I gave you. Yep, ride down to the 200-day moving averages. So I won't consider this swing trade successful. If we reverse now, maybe, you could have booked profits here. You can right now. But if we do that and we go back up and we get in the range and go out to new highs, then this will be, I'll call, this current QQQ swing trade that we're shorting down to the, 200-day moving averages, give or take there around that T4, T5, I'll consider it a failed trade. Okay, so where I'm going with that is the bigger picture, the longer term trend, just the near term trend is bearish. That's all. Intermediate and the intermediate is bullish off the October lows, and then longer term it's questionable because the market's pretty much a double top high. The S&P, especially the equal weighted indexes, the small caps are still well off their all-time highs. The mid caps are. So like I said, to me, bigger picture, the markets are basically, this is a bear market rally, and just the end of the bear market rally, in my opinion, came when we shorted the highs post-Fed right there. That's what I'm going off of now. And so therefore, that's a big part of my analysis. Now, with that being said, what I wanted to get at is, and listen, guys and gals, there's nothing wrong with being bullish and listening, because everybody's going to be right sometimes and others are going to be wrong. So if you believe with the vast consensus of analysts still out there, I just saw 2 days ago that the odds of a soft landing have even decreased more. In other words, more and more, they're doing surveys, more and more money managers believe that we're not even going to have a soft landing, no recession at all. We're going to have a strong 2024 and no recession even in sight, which would mean no bear market in sight. Okay, so my convictions today are a lot higher than they were even back here. How could they not be? Because everything's playing out the way I figured it would. So now where I'm going is that if you are bullish, and I know some of you are, how could you not be? A few weeks ago, again, there was, it was heresy on my part to even, say that we could break that range and go down even to the 200-day moving averages. And so what I'm getting at is here, this is good support. This is that measured target before we even formed the bear flag. Before that was even there, I had 421.62 on my 60-minute chart because it's price support. I see a big volume price histogram cluster bars right there with a thin zone below. Okay, so I'm going to talk on that. Let me show you what I'm talking about here. And I go to the volume at price. I turn up the bars. Okay, so this is a great tool, in my opinion. You have a thin zone here. You can see the red bars come out to here. There's the volume price histogram bars. A thin zone is where very few people traded. If I'm not mistaken, that was NVIDIA earnings right there, the rip up in all the indexes, because NVIDIA is top dog, and it ran up the Qs. Either way, it was not a gap, because there were trades in there, but very few trades. In other words, it happened so fast, so very few traded it. And that's similar, not exactly what a gap is. A gap is no trades, but you're going to have 0 histogram bars. Either way, it works the same. So you have these histogram bars tell you that over this time period, whatever you scroll, if I scroll back farther, it goes farther back in time. But you can see there's a big thin zone right here. And they work just like gaps. Gaps, once entered, are usually backfilled. So I'm telling you 2 things right now, the same thing I told you this morning. We're at support. We're oversold. This is where algos buy, humans buy. This is where they should buy. And if you're bullish, again, take from my analysis that, if you think you've been looking for a dip, you haven't had a dip to buy, or a dip worth buying until now for months. There it is. There's your level. And you can put a stop a little bit below today's lows and let it run. Even if you're a swing trader, you want to take some profits here and hope to recycle back in higher, great. But you have to have a plan. Now, so it's simple. So if today's lows get taken out, so far they're buying it up, as I would expect, at least a minor reaction. But if we take that level out, then that thin zone is likely to be filled, and it should be, the next stop should be about 413, which is the bottom of the thin zone right there. And that's a very technical level. That was that did a lot. That blew out a lot of shorts, sucked in a lot of longs there. There was a period of consolidation above it, which broke to the upside. So that's another level that if we got to, let's just say today, let's say this thing dumps out. Just because we hit the measured target doesn't mean that we must stop there. And I tried to speak to that in the post today. If you're keeping your eye on the prize, you're a typical swing trader, not an active trader. You don't want to risk getting shaken out. You're focusing on where I have a high degree of confidence the markets are going down to the, another, I'll measure it here in a second, but down to those, T4, T5 level around the 200-day moving averages. Then from my experience, this is just telling you, I've done this for years. I've learned the hard way over the years, learned mistakes. I try to share that if I believe with a high degree of confidence that's where we're going, sometimes it's just better to ride out these counter trend rallies, because just as they start to look good and get believable and the bulls will come out of the woodwork and all that, that's when they get sold into. That's the nature of this. So that's all I'm trying to say. So if that's your trading plan, stick with your trading plan. If you don't believe that the markets are going down here, remember I kind of have these multiple targets with a minimum being down here, the 200-day moving averages, but I suspect that as we get there, we're already seeing that selling start to accelerate. The VIX is picking up, volatility is picking up, the down moves are getting bigger. The futures, at one point, I saw them before I went to bed last night down about 1.6, 1.7% in QQQ, Nasdaq 100, and they soaked all that up, bought that up overnight. But what happened. It was Israel retaliating, on Iran, and so oil and natural gas and things spiked. Again, I'm just trying to impress the fact that you're never going to successfully swing trade, especially a correction or a bear market, if you're not comfortable with the volatility and the moves against you. And one way to do that, by the way, guys, is not be too heavily positioned. I talk about being all in short, how I went, even in anticipation before we broke down. I said, look, that's officially the all in moment, but all in or a full short position or a full position in anything, full long, full short, be it natural gas, be it QQQ or NQ or treasury bonds, that's up to you what that means. It doesn't mean to me my entire portfolio is in Nasdaq 100 because I have other things. It's just you have to figure out what allocation you want. It's an index, so you want to do 30, 40, 50. I'll be honest with you, sometimes I'm over 100%, but that's leverage because I can leverage up with the futures to have a more net short exposure in dollar amount more than my whole portfolio, but then I can be hedging with treasuries or diversified with natural gas, crude oil, gold, silver, you name it, and therefore I might have more short exposure than my entire trading account portfolio, but I have other offsetting positions that mitigate that risk. So I know that might sound complex, but that's how I use leverage as a tool that way, not to go crazy, 10 times, 5, 10 times short my entire portfolio amount into any one thing. That's financial suicide. Sooner or later, you will get cold clocked trying to trade like that. So again, your number is your number. And then how you want to manage it. Like I said, this right here, when I look at the daily chart, by the way, I showed you the support level right here that I have on the 60, but it's not much on the daily. And that's what I wanted to show you here. So you have T2 is pretty good support right there. There's T3, it's okay. Here's the 200 days. So this is, I've been telling you all along, this is what I favor. So when I say keeping your eye on the prize, hell, we could do that. Back test 433. I told you before, I don't want to see us go much above there. That's when I start being concerned of where do I start covering because this market really shouldn't go back there. I don't even think it'll get all that way up back up there. If it did, it would certainly be an objective short, but I wouldn't keep shorting above 433. Again, I'd be more concerned where to stop out than to be adding any shorts. I want to make clear. So, and it's not a big range. That's what I tried to say this morning. If it was confusing, what are all these arrows, Randy? We're going to go up. We're going to go down. It's only 2.4% if we made a full back test of 433. It's not a big number. And so it's just showing you, look, We're oversold. I have things that, PPO at an extreme level. We're at support on the 60, as I showed you. Bear flag measured target. So the buyers, they're going to step in. And you don't go from like extreme bullish sentiment as we were recently. I showed you on the AAII surveys and all that recently. We don't go from like extreme bullish to extreme bearish. It's going to do a lot more to really cut the heart out of those diehard bulls that think the market's going to go up and close the year, build and take out the recent highs and continue to build on the gains. And that means, I think, when we take out T5. And I just wanted to also reiterate, these are just what I call interim or initial swing targets for a typical swing trade. I still have longer term targets that I've never abandoned. They were put back in place in 2021 and in the beginning of 2022 on my weekly chart. I'm not even talking about them now because first things first, this trade needs to play out. If this trade plays out, we get around the 200s, we get to T4, T5, I'll let you know which one I'm starting to cover. It'll probably be a scale out thing, maybe an all or none if I see something like any type of capitulation selling or anything. But yeah, I think the odds favor the buyers will step in around there, and that's when we'll get the first swing tradable bounce. And I tried to define that for you today in the post. 5-10% maybe, somewhere in that range, possibly a little more. A rally that's going to last days, possibly weeks. Not anything now. I suspect will last days at most, maybe 2-3 days, and then get sold into. Or like I told you this morning, we were at, I gave you a series of levels. I don't know what board I was on, but I might have hand drawn in. There's that downtrend line. I had it on the futures as well. And so, we're at price resistance. And remember yesterday, the post I did get off to you, made a point to, is that look, QQQ took out T1. And I said, as long as it doesn't, as long as it didn't recover that by the close, T1 with support, then that increases the odds of a move down to T2. So this is swing trade. So if you're, again, a typical swing trader, don't worry about the little, if you have dry powder to add, those are levels you can add to. But if you're already fully invested, that's why I said that will mean something different to each trader. If you're already fully short, even if you have margin buying power, but you have your comfort position, which is your what I call sleep at night position. That's the old thing on Wall Street. They say, if you aren't sleeping at night, you need to sell down your position to the point at which you can sleep at night. It means you have too much. If a 1 or 2%, we could see a 3% rip up in the market, short covering rally, counter trend bounce, and you got to look and see what is that going to do to me dollar wise. You can do the math on it. Pull out a calculator and say, what would a 2.6% rally if we do back test 433 do? Because it's certainly possible. I mean, anything's possible. It's in the realm of decent probabilities. It's not, I put that the lowest scenario, but it's certainly possible. All right, guys, enough on that. Anyway, I just wanted to say, based on all the evidence that I've seen lately, taken collectively, I'm speaking to general swing traders. I think it's probably best to sit tight. And if you missed, you were doubting the break of 433 or anything, all the other, or the back test or the bear flag breakdown, there were so many recent reasons to add to. If you weren't fully short yet, you had multiple opportunities. This thing, and we're getting to the point, I'm going to tell you now, because I've done this long enough, I'm going to get the questions. Randy, is it okay to short here? I don't like it. I wouldn't. If I miss, I like to get in early and get ahead of this. I just feel kind of, for lack of a better word, icky to short what I call no man's land. No man's land is, if this was the breakdown point and this is where I think we're going, you get down in the middle, it's no man. It's like, in tennis, you don't play the middle of the court. They call that no man's land. You either play the back of the court or you can rush the net. But if you're in the middle, they're either going to lob it over your head, lob a short one over the net, right over the net you can't get to, or they're going to put one over your head you can't. So that's why, and trading's the same way, because I don't want to buy short here and then have to ride that out. Anyway, I gave you levels that you can add to. All right, so there's the initial swing targets. For some reason, no wonder the time frame on this chart changed. My bad. Let me go back to a 60-minute chart. Bear with me here. Hourly. Okay, there's my daily chart, board 7. All right, that's I was just on a 2-hour chart. It was kind of stumping me as to why that was. There it is. So we're clearly below there. We took it out in socks as well yesterday. I told you I screenshotted that one in the morning. Something's going on. I keep flipping time frames here. Bear with me here. That should be a daily. Okay, sorry, I had to fix something. I had to restore my layout to the startup. Sometimes that happened. It changed to one of my daily chart changed to a 2-day thing, so it was kind of messing me up there. All right, so that was it. So we took it out yesterday. We didn't recover 209. That was my first target on the SOX swing trade. Remember, we had that bearish engulfing candle. And then we broke. So that's it. We're below those support levels, and that increases the odds that we're going to go down to T2, whether we have a little kickback rally first or not. Okay, simple enough. Now, the other things, and I'm going to just wrap this up with the FANGs. So I wanted to kind of say, have your trading plan. When volatility is high, the counter trend moves, the reversals intraday are going to be bigger. And if it's, freaking you out, I don't know how else to tell you. It's just part of, you're going to have to be comfortable with that. Again, sell down, keep a smaller position size. And also, again, if you if you disagree with me how far we're going to drop, and you're bullish, the same levels that I'm showing you, I'm waiting to break. The same support levels and targets I'm highlighting are levels that you can buy longs and go long. But I think this is just the start of a much bigger move. Is what's most likely it is to me. And then where my convictions just go are very high right now. I don't want to sound overconfident or cocky, but everything, it's playing out to a T. If you go back in the last videos, Apple, for example, even before that breakout that I missed the other day, I also, right before there, one of these videos right here, I said, look, Apple's going to bounce. It's oversold. It's got divergences. We're looking for a counter trend bounce. So we're going to get a bear market rally soon. And that was just the catalyst, the breakout. But then I predicted right here, I did it in the video when on that day that Apple broke out. I gave you a little more upside. I said, look, it's probably going to run. There's a little more. Here's your targets. Here's where it's going to go. But I predicted it would fail. Now, to predict such again, to me, like I said, I could see, and I told you the reasons why I didn't take it and why I thought it would fail. But it was on a scale 1 to 10, just a beautiful bull setup. The downtrend line, the wedge, the positive divergence. It's Apple. It was at major support. So forget about the positive divergence and the trend line break. We were at those key support levels. But, my read was based on where the market was and everything else, that move would fail. And this is right when at the highs. This was, I think, last Friday. Yeah, so I expect the breakout and big move will fail by next week, and that's this week. And and it was likely to build relatively slightly, like I said at the time of the breakout, about 3% or so on top of yesterday's gain. So yesterday was the breakout. It was the biggest gain Apple had in, I forget how long, but a long time. And so where am I going with that? I'm not trying to harp on that call, but what it shows me is that my read is correct. If this is bear market action, a bear market or bear trend is just like a bull trend in reverse. Bull trends, and believe me, I experienced my fair share of this last year, and I know some of you did. Being on the wrong side of it, it's brutal because you get these beautiful little setups, rallies into resistance, bearish wedges or other chart patterns, and they break down. They look good, you short them, but then boom, the buyers just step in and foil the breakdown. And so in this case, that had happened in reverse. And this doesn't happen in a bull market or a bull trend with one of the leaders. This is Apple, guys. This isn't, XYZ, little micro cap semiconductor, some, stock du jour, AMC or, meme stock. This is Apple. And that sucked in a lot of cash. You can look at the volume. It was huge both days. And then as predicted, and my prediction was precise, so that it would fail. That was, I think, a Thursday breakout, and we built on Friday, and then it started failing immediately. Nothing but red sticks. The breakout has failed. That means everybody, every single human and machine that bought that breakout is lost money on it now. and breakout happened, then most buy in here, the volume gets going. And so that to me is just very bearish. And again, it's just another check mark. I talk about all these check marks that I've been looking for months now, and we get one after another. And this too, that was the failure of the breakout was a big one for me. And then look where we are. And remember, back here, I was long and strong and bullish Apple and the Nasdaq 100. That was that purple line. I said I was talking the bearish talk if it breaks, but at that point we didn't break it, and I saw everything at the 200-day moving averages, divergences, and we actually bought market. And I posted cover all shorts, go long. That's what I did. But this time around I didn't, and so that's the difference. I've been looking for this top in the market for a long time in a bear market rally, and this is just one of many things. Again, I've been doing these hour-long videos in many cases, talking about just the mountain of evidence building and using that whole, criminal defense case, where the prosecution just has to build a strong case, and the more evidence they have, the more likely they are to get a conviction. And when you're trying to call the top of one of the strongest trends in years, and I'm talking about off the 02 lows and what we did in 03 in the first quarter, you've got to have a lot of evidence, and that's all, guys. So a lot of evidence. This was just one more checkbox for me. So it's not. And now I'm going to get to the other ones that we need. So I already covered all the sectors recently in recent videos. I covered that I've had the top 5 sectors, and that's all I needed. I just needed 3 of the 4. We got all 4 and down to the 5th. Tech, healthcare, financials, discretionary, industrials, communication. They're all check marks. They all broke my support levels I was looking for. The last holdouts here are Microsoft. Remember, I've been covering this one quite a bit. Microsoft kind of won the AI wars, if you will, because they jumped the gun in front of Alphabet. Apple didn't, kind of sat back and got caught completely off guard, and that's why Apple is where it is. I believe, many believe, market sentiment was because Microsoft had a stake in OpenAI, which is on ChatGPT, and then they went all in with their AI thing, and then Alphabet pulled a massive 180, and okay, we're going to plow tons of resources. So then everybody was liking Google with this whole AI hype and mania. And so Apple, these guys need to die. They're the last of the Mag 7 that haven't. And so Microsoft had this big purple trading range here, broke out, put another trading range above, had negative divergence. Everything in the chart said that breakout would fail. It has failed. The breakout at least above this trading range, but for months now, all the way since back here, 397 is my magic number, and it still is. That level needs to go, and that's going to be a very significant support break for Microsoft, and probably quickly bring it down to the 200s. And this next target I have here, 364.54. If you want to trade Apple individually, if you're an options trader, it's 9% to my 364.50ish target. It'll undercut the 200 days briefly, and then the machines will step in and buy it on or around the 200s. But again, I think we'll go down to that level there. There is support right above them if you want to play it safe. 376.35 is you can see it's this trading range here, right there, top and bottom, and the 200 days smack in the middle. All right, so there's Microsoft. Needs that. We've gotten checks. We broke the yellow trend line, back tested. We broke the secondary benefit of the doubt trend line. We consolidated on the 50-day moving averages for 3 days. We broke those. So it's just, it's a series of check marks. And the more you get, the better the chance you have to get a conviction. And that is to, convict the bull market and send it to jail for at least, my opinion, can be many years, but there'll be some great, phenomenal bear market rallies along the way if my longer term scenario plays out. But again, I'm getting ahead of myself. I know people don't like hearing that, my long-term predictions on where I think the market's going. So we'll just trade it day by day, week by week, swing trading it right now. And that's how I always trade it. I always get I don't think I've missed a bear market rally since I've been doing this. The big ones, the 10 plus percenters. On the long side, that is, covering shorts going long. So Apple, there it is. Apple check mark. Can't ask for better. We're below my purple level. Just need to close the week below it, and that's even better. An additional check mark. NVIDIA, I gave you a post the other day. I said I can sit here and talk for an hour on all these other. We've gotten so many checks. This is the last one. When they kill NVIDIA, we're below 840. Is it? I always say if you have to squint, remember 840 was the bottom of this big purple trading range here, and it's on the 50-day moving. It is below it, so take that for what it's worth. And that's why I would be that's why I'm not going long. That's why I didn't go long today. Told you I'm sitting tight, give you my plan. And if you are thinking about going long because, whatever reason, what you want to see is NVIDIA to get back and close. You don't want to see it lose this level. And like to say on a breakdown, the redder the better. So if we're down here today heading in, the final half hour of trading, it's pretty safe to say NVIDIA has given up the ghost and broken that support. It's below it now. It's broken it. But if we, at the end of the day, it's a daily chart. As you know, a lot can happen. Look at the size of these candles. It's in the nature of this beast. NVIDIA can swing easily, 10% from high to low in a day, in a range. And so then you can see I added a trend line here. So as currently being short and bearish, what I don't want to see is a recovery back above 840, especially, if it does, it's just holding the level really is all it is. It's an intraday break to close back on there, so it won't count as a breakdown, at least not on a daily basis. And there's a trend line. You don't want to see it break that. And if it does, you don't want to see it break that previous reaction high. Those are all check marks for the bull case. And as I told you before, I promise you this market's not going down significantly or substantially until unless NVIDIA, the king of AI, the king of the stock market right now, breaks. And they break this one, they've killed the general. They've killed the 5-star general, and bears are going to win the war, at least down to where I talked about. And then the longer term, you guys know my targets. I mean, if you're new to the site, these were the targets I laid out back here, all the way back in 2021. And back then, NVIDIA was still very beloved. It was, always has been. It's been a hell of a stock. But we called it down to that level, 69% drop, almost to impunity, hit that. And I had longer term targets, which I still maintain. But when we hit that, we had a lot of evidence to cover shorts and go long, including NVIDIA and Amazon and some others. And so basically that's just a powerful reaction off a support level. But still got these longer term targets. And I'm probably the only person in the world that thinks NVIDIA can drop 90% from where it's at now. But will I be short that whole way down? No, but I'll be watching this, and that just fits my longer term bear market narrative. But most don't want to hear that. Most don't believe it. So right now, these are levels to watch. 840. Then my purple primary uptrend line off the October lows. That's a big one, guys. If that goes, 742 is also a yellow line, important level I have. It intersects with the trend line. And then that's going to bring us down here. So if you just want what I consider a conservative target, and that's going to entail, us hitting at least that those near-term swing targets I have on QQQ right here, 500. So just above 500. So really, it's a 40% drop in NVIDIA, and it's where I think we'll go if and when this trend line gives way. Especially on a weekly closing basis. You got the 200-day moving averages here, but that's just a great level right there. That if you're looking to buy NVIDIA, and I can tell you now, if the charts confirm, I will most likely be a buyer. I will most likely be covering any index shorts I have at that time, and most likely reversing and going long and buying NVIDIA if and when it gets there. And I'm sure they'll buy it on the trend line. I just see something like this. We break 840, we go down here to 742, hit the trend line. You can game a bounce. It'll be double digits, go up to 840. There's that downtrend line, then close that long, short it. I'm getting ahead of but this is how I trade. This is how I, can see the most, if right now that's the most probable path for NVIDIA, in my opinion. So let me just call it down for you in percentage terms. Go down here, we drop about 15%. We bounce, they rally it back up. Again, this would have to confirm I'd have to be able to make a case to cover QQQ shorts, make a case that at least Apple, Microsoft, Alphabet, some of those are going to bounce. Some of the sectors are at my, support levels as well. Do that, and then get the longer term sell signal and a break there. All right, I think I'll stop talking. I'll cover everything else later. Like I said, and I like natural gas. The VIX, the VIX hasn't even let loose yet, but it's. I think it's going to soon. If I'm right, I'll just get a price alert. I'll go over that for you in a second. That was Meta. Meta just gave me a price alert. This is a delayed version, but I have a live version, a live chart on other monitors I'm looking at, and the VIX is it's starting to really take off now. So it just needs to pop that recent high. Remember, I had this target zone right here. We've been consolidating around, and again, you don't trade the VIX itself. You can use the ETNs or the futures, but when I say let loose, I think the VIX will be, by the time we hit, if and when we hit my, those initial swing targets, the T4, T5, 200-day moving averages area on QQQ, we're either going to be here or quite likely here. This will be, that's where, unless something breaks, remember, my analysis is dynamic. Charts change, something happens, a big financial institution breaks, all hell breaks loose in the Middle East. Right now, they're just tit for tat shit going on with Israel and Iran. I'm not to minimize it, guys. For anybody that has family over there, I don't mean to sound insensitive. I'm just talking. They have to do it. It's kind of almost like an ego thing. If you strike me, we're going to strike you back. But so far it's been contained. But like I'm saying, if things start to let loose, what I'm trying to tell you is we could go right on through the 200 days. Do not pass go, do not collect 200, go straight to jail kind of stuff. And if so, then the VIX could really explode. But right now, I'd be very happy to see a spike here, even right here. And again, I already gave you I shared as a comment to somebody the other day, you can go back in the last couple of days, how to trade the VIX. The VIX will almost always peak first before the stock market bottom. So I typically, as I'm getting near my swing targets, like on QQQ, we're getting down to T4, the 200 days, I'll be looking if the VIX is at resistance or tells me otherwise to start booking profits on my VIX futures. And then a little after that, the stock market should bottom. And then at that point, may reverse, go long equities, and maybe even short the VIX. We'll see. But all right, let me stop here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. I'm sorry. I told you I had a price alert. I want to just check it. It's Meta. Meta's on that big yellow, thick yellow, because that's important. It's a beautiful trend line. I remember some folks last year, giving me grief about, Meta being one of my favorites, but I said I had to break the trend line, and never broke the trend line. And so this is, if I was really liking it, it's been building divergences for a long time, but it continued to hold support. It never, ever gave a sell signal here. It's been in this trading range here, and then started walking up the uptrend line off the 2023 lows. We're right there right now with price support about 476. And then an even bigger level, that's kind of an all-in. Meta's dead at 454. If the trend line goes, Meta's dead. And it's going to go, I think. It looks like it. But then why 454? Because there's a massive gap there that will want to be backfilled, and it's going to take Meta down to the 200 days and anywhere in here. And so Meta's got a lot of downside, in my opinion, if you guys are looking for individual names. 20, well, let's just say to backfill the gap here, it's like 17% or so. All right, guys, I got to stop. Get this video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.